Hello and welcome to Core Finance. I'm Matt Brown. I'm joined down the line, live from Hong Kong, by Miles Pelham, who is the chairman of Obtala Limited. Good morning to you, Miles. Are you well?
I'm very well, thank you. Good to speak to you, Matt.
Fantastic. Thanks very much for coming on the show so early this morning. Look, lots of news flow over the past couple of days from Obtala. We had first half interims yesterday. They showed a very healthy profit from the on the back of the WoodBois acquisition from back in July. Was that expected?
Well, I think we always saw the value in WoodBois, so it's no real surprise to us to have a mark-to-market gain on the acquisition. But look, I must say that the value is not in what the IFRS accounting standards might define what we need it on our books as. I think the value really is in the deep relationships that these guys have built up over the decades, the knowledge and experience of the founders and the managers within the business, the supply lines that they've put in place again over decades, and of course the assets they've got. So look, ultimately we've purchased a platform which they've built, and with those guys on board and integrated into our forestry business, I believe that we really have the perfect mix of their expertise and platform complemented by our Mozambique assets, and our board savvy and financial know-how, and together we can turn this into hopefully what is a giant of the industry. When we talked last time, just after the acquisition, I spoke that they've had a €3 million credit line and managed to generate $15 million worth of revenues from that. So these are guys with hundreds of exclusive and semi-exclusive deals with sawmills across Africa, so they really can source this supply. They make anything from 5 to 40% margin every shipment, which is every 60 to 90 days, depending on whether it's kiln drying or not. So if we can focus and we can secure a trade finance line for those guys, and they can reuse it every 90 days, you don't really need to be a rocket scientist to work out what that will really do for our numbers. Since last year we had nascent revenues, and this year we should have much more healthy. But next year it could really be exponential. So, but that's the value that we identified here, and what investors should really focus on. It's not really whether some chartered surveyor valued their assets at 20, 50, 100, or even zero. It's that we're not going to build this company and get rich by unrealized paper profits. We're going to really build this company by monetizing the assets that we have, monetizing the assets that we've acquired, and building revenues. And that's that's what's happening right now on the ground, which is great to see.
That's good news. Great to see you're now in profit. Also out yesterday was news that you completely overhauled the corporate structure and installed functioning boards across the subsidiaries. What was the rationale behind that?
Many, but I would say that one of the main drivers is that over the past 12 months we've had a great number of meetings with sustainable investors and government bodies and NGOs, and what we've witnessed is really a common theme of 2 points. And the first point is that these investors and funding vehicles usually have a mandate to invest in either agri or forestry, but very rarely to invest in both, which an investment in Obtala is. And that if we do go and speak to someone that has a broad sustainable mandate, they usually love the idea of the agri, but worry about the forestry side. A lot of them see us as butchering, or as one guy said, butchering the world's forest, which is absolutely totally incorrect. I mean, we're 100% sustainable harvester of timber, and if we weren't there protecting the well-being of these forests, then really the bad guys would be in there doing lasting damage. But nevertheless, it's a grey area for these guys and these bodies, so they err on the side of caution and don't invest. So yeah, one of the driving reasons for this was to install the independence of separate boards to allow the businesses to flourish and attract investment on their own right. But it wasn't the only reason. I mean, there are many other benefits in terms of budgeting, management, hiring, branding, all this sort of stuff that a fully functioning and focused board can really excel at. So that was the main rationale behind those changes, as well as having a bit of a management reshuffle, and you see all the different posts that we appointed yesterday.
Fantastic. I'm sure investors will appreciate not only the sustainability, but also obviously you've got that structure in place now. And moving on to today, you've got a quarterly update. Today it also shows you're finally entering a new paradigm. Is this encouraging news, would you say?
No, well, it certainly is. Production figures are terrific, and look at 15,000 cubic meters. We're producing well over 100 times what we harvested last year during the same period. So the exponential growth in terms of production capacity and scale that we were talking about 12 months is coming online, and we're producing the results. So the new equipment is making a real difference. We hope to have decent production growth over the coming quarters. On the agri side, it's been extremely encouraging. I believe that recovery rate on our melons last year was around 70%, and the first harvests of this year are coming out at around 94%. So that's very pleasing in that the processes that are being put in place, the equipment we've given the guys, is really leading to more efficiencies on the ground. But given the nature of agri, whereby we plant in the first half and harvest in the second half, and forestry, whereby we only start cutting in Q2, we're always going to be a second half revenue company. But as well as revenues, we've got expansion this half, or second half, that we can look forward to in completion of the veneer factory, completion of the sawmill, and the expansion of the timber trading business, as I talked about before. So, yep, encouraging and very exciting times. It's happening, and it's happening now on the ground, which is great.
Fantastic. Lots to look forward to. And finally, it's been mentioned by investors that there could be a potential for a dual listing for Obtala Limited. Is this any closer to happening? And if so, where would you also look to have that dual listing?
Yeah, we've been very busy this summer with the integration of the WoodBois acquisition and the completion of the WoodBois acquisition. But certainly a dual listing has definitely been a focus. London will always be where our roots are, but it's clear that we need to find other avenues for our natural investor base to be able to invest in Obtala, other than the AIM market. 95% plus of the investment we've received has been from Asia. So it's where the growth is. It's where the capital is. So I think it's in the interest of all the shareholders that Obtala has a platform for Asian-based investment. It's been very easy for us to place $26 million or raise $26 million by the pref issue in blocks over here. But if anybody tries to buy the stock, it's just near impossible. The broking platforms, a lot of them are online, or virtually all of them are online, and they simply do not support the market making system that AIM has. They won't allow orders to go through. So in Hong Kong, for example, where I'm based, there's only 2 mainstream banks that support buying AIM stocks. And if you want to go and buy an AIM stock, it takes you 4 to 6 weeks to open an account. So it's not convenient, it's not easy, and we need to address that if we're to help increase the liquidity position or liquidity in our stock. So if I look back at kind of 2017, we've delivered on the promises that we talked about last year. We've hit our targets. We've made an excellent acquisition. We're in the midst of significant production increases, and yet the stock price is down 25-30% over the course of the year. So I don't necessarily think that will happen if we had a dual listing in a jurisdiction where there was more liquidity and more responsive and amenable investor base, and to be honest, more appetite for the African continent. I mean, this place is growing, and they need resources. So for sure, dual listing is going to be a very heavy focus for Q4, and a heavy focus for me personally, and I'll try to make it happen. The 2 markets that we're looking at the moment are ASX, which is Australia, and Hong Kong.
Fantastic. Well, lots to look forward to. Obviously, lots of news. So for the viewers, please check out the RNSs that have come out over the past couple of days. But in the meantime, Miles, the chairman of Obtala Limited, thank you very much for joining us down the line from Hong Kong this morning.
Thanks for having me, Matt. All the best.